Hey, welcome to this week's Real Estate of Life with Kevin Ruiz and friends. I have a friend on this week. It is Omar Ruiz with LeRu Investments. We're going to talk about the 4 things to consider when doing multifamily due diligence. If you're thinking about buying an apartment complex, you want to listen to this episode. So, Maestro, hit the music, please.
Support for this program comes from the Digital Broadcasting Network, presenting podcasts and web series from everyday people who have an extraordinary passion to make the world a better place.
Welcome back to the Real Estate of Life with Kevin Ruiz. This is your friendly real estate broker, commercial real estate broker, Kevin Ruiz, coming to you. And this week we are again Kevin Ruiz and friends. I am so happy to have on with me this week not only a client, but someone I've gotten to know over the last couple of years. Our relationship started when he purchased one of my real estate listings, my apartment listings, and I've gotten to know him. I've actually gone out to California to see him and talk to him and do some seminars on Texas real estate, Texas commercial real estate, and specifically apartment investing in Texas. So I want to introduce you guys to Omar Ruiz, who is a principal with LeRu Investments out of California. And today we're going to talk about, as I mentioned in the intro, 4 things to consider for a multifamily due diligence or apartment due diligence. What are some of the things that you need to be aware of as you consider a apartment complex as your investment? And to be honest with you, some of these things will apply to other types of commercial income, but definitely apartment investments. So I want to have an expert on, and so I want to welcome you to the show. Omar, how are you doing?
I'm doing great, Kevin. Thank you for having me, and the information that you put out is fantastic. I'm sure your listeners get a lot of good value out of it.
Well, I appreciate that, Omar. And by the way, folks, I did not pay Omar to say that, but I do appreciate him saying that. In fact, the last transaction we had, I was paid from a seller. So again, it's been that way. But anyway, what I wanted, Omar, before you got into the 4 points and kind of some information as to due diligence, I want people to kind of know who you are and your background, how you got into real estate investing. So if you can kind of tell us, your background up until the point you started to get into real estate.
Sure. I actually, my background was actually in aerospace, and that's what my profession was before getting into real estate investing. And I was also formerly educated in the university in marketing and done some things with that. Mm-hmm. And me and my partner, Jeffrey, now, I think early on we understood the advantages of having more units under less roofs. The idea of having economies of scale working for you, really made sense to us. Mm-hmm. And so we didn't actually start off investing in properties. We actually started in property management.
Oh, okay. I didn't know that. Yeah, I didn't know that.
Yeah. So we have a small boutique property management company here in California. What it was is that I had a contact that was trying to sell a 7-unit apartment complex here in California in the Inland Empire area, a city called Riverside.
Okay.
The thing was that they were having a tricky time getting buyers because they didn't have really good, clean financials. They weren't. I think their books were not super solid.
Okay.
And so it's about that time that we were looking to get into buying apartments. And so we proposed that, hey, let us manage this property for you. And in doing so, we'll go ahead and put together some clean books for you, some clean financials that you can present to a buyer and, help you with the transaction. And so, they were willing to do that, and we were interested in learning the process of property management because we always knew that, property management is so important to your success in multifamily real estate.
Absolutely.
And so we started like that, and we would go in there and we actually had to remove some of the tenants. There were some tenants in there that I kind of suspected they were, doing some illegal activity, selling drugs or doing, whatever nefarious activities. And so we brought in good tenants. We fixed up. They had a really kind of shoddy maintenance guy over there that actually created more problems than he fixed. And so we had to fix a few things there. It was. I always remember there, Kevin, but there was this one particular day, I would go over there and hang around the property. Even if there was nothing to do around there, I'd grab a broom and a scooper there and just go around sweeping up the parking lot. And I kind of really, I felt like, the property was mine, and standing there, I'd look out at the parking lot and imagine myself someday owning something similar to that. And eventually it happened, and those were the beginnings for us. And from there, we just, started buying more and more properties, and it was just a great, fantastic experience for us.
No, that's an interesting way. I out of all the years that I've been doing this, I don't know any, at least my clients, that have started actually on the property management side and then traversed over to ownership. So that actually is a pretty good way to start in retrospect, because you get to see what happens from a management standpoint, rental income, screening tenants, all kinds of tricks of the trade, from under the cover. So that's ingenious, actually. I know y'all may not have intended to do that, but that's really ingenious. How many properties do you guys have in ownership and under management, or units you have under ownership and management now?
Under ownership and management now, we're we're all around 200 some odd units there with some of the stuff. We're in a couple of different states now. Okay. And
which states? I know you're here in Texas. I know you're specifically here in Houston because I sold you that property, but where are you guys now?
Here in California, we have properties in Houston, Texas now. And now we're in Indianapolis, Indiana there.
Okay.
And we're looking at some of the other states there in the Midwest or Southeast also right now. I just got back from Alabama, so we're kind of researching stuff out there right now.
Gotcha. Well, I wanted people to kind of hear your background, hear, the story, and also understand your unit count. So you're someone that is not just talking about it, you are doing it. And I can tell you, folks, having worked with Omar, when I say thorough, I really mean thorough. This guy, you can tell I didn't know you had an aerospace background, but you can definitely tell you have a detail-oriented CPA engineering something type of mind, because if you give Omar something, he is going to read it, which is not a bad thing. I'm just telling you, not everybody does. So he will put that pen to paper and get that calculator out real quick. So to that point, Omar, the article you wrote on your blog that we'll reference here in a second, your website, so people can kind of learn more about you. But 4 things to consider for a multifamily due diligence. I looked over the article and read it. It is something that I agree with and do myself as I'm about to list property. But let's kind of start, and I'll let you kind of introduce the topic, and then maybe the first point is you have to know how much income is coming in. That's the whole purpose we do this, right? Absolutely.
And so to determine that, you have to request the right documentation. Obviously, the article that talks about the rent rolls, copies of, the leases and all that. And interestingly enough, one thing to kind of caution, some of the beginners out there, or, the rookies, there's a document called an estoppel document.
Yep.
Okay.
Familiar with it.
As we're actually, we've been selling off property and stuff, and on the commercial side of things, when I see a buyer on a bigger property asking for estoppels, that kind of annoys me a little bit, because then I get the impression that this person does not understand commercial, or is not very experienced in commercial. Because estoppels is a document that you typically see more often on the residential multifamily, like on a duplex, triplex, quadplex. But if you're looking at a 50-unit or 100-unit apartment complex, I mean, can you imagine the work for an agent to have to fill out, 100 estoppel documents?
Yeah, and I would say here in Texas, we actually don't even use them for 50 to 100 apartment or the smaller. We just use them for non-multifamily, non-apartment type commercial deals like retail and office and things of that nature, where you might have at the max 10 or 15. And folks out there, estoppel certificates are basically a third-party way to verify that what's on the lease is what the tenant's understanding is on the lease. So the term, the payment, when it expires, and the tenant basically certifies that is correct. So when he says estoppel certificate, that's actually what it is.
Yeah, exactly. So if you're a buyer out there, you're looking to take down, an apartment deal that's on the commercial side of things, and if you're going to ask that seller for an estoppel, okay, it's going to give that seller a bad impression about you. So
and it's going to make the broker mad.
It's going to make the broker, right. It's going to make the broker furious, right? So you know what I'm talking about there.
Yes.
So that's very important. You need to get those documentation. There's also things like other income that is involved in purchasing these larger apartment complexes. One of the common things you'll see is laundry income.
Yes.
Okay. So in laundry income, it's generally handled two ways. Either the owner owns the machines, in which you get to keep 100% of the income from the from the income generated there.
Right.
Or there's going to be a contract with a third-party vendor that brings in their machines, and they typically give you 50% of the income.
Correct. Yes.
Okay, so you want to be aware about that. Review the contract, see how long that contract is for, and see what the conditions of that contract is. There's also things like vending machine income and storage income. In fact, in one of the apartments that we purchased here in California, the seller was not doing a really good job of utilizing the garage space that they had at this complex. So when we took it over, we started renting out the garages, and we brought in a nice chunk of income just in renting out those garages. So those are all things to consider. Also, on your utilities, some properties, they'll bill back the utilities to the tenants. Okay, and you want to see that bill back is happening on a consistent basis. This one particular property out in Indiana, during the due diligence period, we discovered. The seller he did this thing where some of the tenants that were moving in, they would complain that they had to put a security deposit to put the electricity into their name. And so the seller, being a nice guy, he said, okay, well, I'll keep it under my name, and I'm going to charge you a, $60 utility allowance. All right?
Right.
Well, it's logical that when people don't, they're not responsible for their own utilities, they're probably not going to be as careful about it. Would you agree?
Right. No, absolutely. I'm blowing and going. It's 80 degrees or 60 degrees. I got the windows open, air conditioner on, and the refrigerator open. So absolutely. Right.
So what I discovered in the due diligence period, when I checked out the utility bills and all that, there were some tenants that were using as much as $120 a month, and he was only.
Yeah, he was in the hole. Yeah, I've seen that happen as well.
He was in the hole.
Yeah.
Exactly. So that's something you want to look for, and we just instructed our property management team out there to make sure that they start having that utility transferred into their name.
And as we about to get into the second, which is expense documentation, I'd like to add to your all the great points that sometimes I do get potential buyers requesting the tax returns of the owner or of the entity that owns the apartment complex. And I can tell you as a broker that typically is a hard cookie to crack. One, because of privacy issues as to Social Security numbers or EIN numbers. But two, a lot of the investors I work with have multiple properties in one entity. And so the carve out for that particular property can be sometimes difficult. And then three, if they are not sophisticated enough to have a separate entity, then you're asking for a copy of their personal income tax statements or their Schedule E's. And that can be sometimes problematic. Now, with that said, I have had some owners that would be willing to do that, and we redact private information. But I can tell you that is a way to try to see if the income documentation that they're providing jives up with what they reported to the IRS, but it's sometimes a heavy lift. So don't be surprised if you ever request that someone might push back. I don't know if that's been your experience, Omar.
Yeah, and I don't like asking for those kinds of things. I like to be able to, I want to be easy to do business with.
Right, exactly.
And that's always going to help you get the deal done. So I don't like requesting those kinds of things. I've actually had it before where they'll actually voluntarily give that up, and that's fine, no problem with that.
Yeah, no, and I've had that as well. But I've also had some folks that say no, and then I have potential buyers saying, well, I want to see them. And, we just get into a back and forth. And that's just, no one's voluntarily giving up their tax returns. And, just to be quite candid, a lot of that, for instance, if they own the washing machines, a lot of that is in cash, and that might not go, they may go unreported, just to be honest. So it may not be on the tax return. So.
Right. I mean, you do want to be careful, but you don't. Like I said, you want to try to be easy to work with. I have had it before where I've asked for bank statements if things are separated and all that. And you just cross out the account numbers and all that. That can also work as well. Except when they have, like you said, if they have several properties and not everything is itemized, is isolated on there, that can be tricky as well.
Right.
I had there was a mentor that mentioned he had this phrase that sometimes you have to make perfect decisions with imperfect information.
Right. No, absolutely. Especially for our mom and pop owners that don't have professional property management, that is always the case. So let's talk about number two, expense documentation. Okay. You kind of went into actually a perfect example of where you found during due diligence an expense out there that wasn't well monitored. And so you found that definitely would have an effect on your income. So let's talk about your point number two, which is expense documentation.
Okay, well, when the expense documentation, you want to request copies of all your receipts of your fixed costs, things like the taxes and the insurance and those kind of things. Keep in mind, though, that every time you purchase a property, it is going to get reassessed for the taxes. So you want to make a good estimation of what that's going to be.
Right.
Do expect those taxes to go up. So, you want to call in your tax assessor's office and also the tax collector's office and see if they can help you out with the estimating what the future assessment will be. Insurance as well. On these bigger properties, if you're getting what is called agency financing, if you're working with the Freddie Mac or Fannie Mae, they're going to want a few extra things in the insurance rider there, so it may cause your insurance to go up a little bit. And insurance is not, always the easiest thing to estimate there, but you can always pad it a little bit and give yourself a little bit of extra. How should I say, padding there? I guess.
Right.
The property management too. You're going to have different rates depending on how big or small your property is. So you want to be clear on what those numbers are. Don't assume that what a manager is going to charge you on a bigger property is the same thing that they're going to charge you on a smaller property.
Mm-hmm.
That's usually not the case. Their rate's going to go up on a smaller property, and that's just industry standard out there. Okay, your variable cost, things like utilities, maintenance, repairs, and materials also. On the utility side of things, you always want to see how they fluctuate over the seasons, because in different areas you have different needs from the tenants. Out there in Houston, obviously you want to have air conditioning, and in the summer months, your electricity bills are going to go up. Okay, out in Indiana, the big thing out there is the heat.
Yeah.
In the winter time, they have some really, really cold winters. In fact, we're expecting a cold winter this time around.
Polar vortex is headed to Indiana right now.
Exactly. I've been tracking that same thing myself. So, so you want to see how that utility fluctuates over the year and then average it out per month. Sometimes I've seen properties where they give you like a T3 or a trailing 3 months or a trailing 6-month income statement. And that only shows you half the year. And if you're looking at half the year when the utilities are not getting utilized to the max,
you're looking at the good half of the year for them to be able to justify pricing, probably.
Exactly. And then so you can be underestimating your utility costs for the whole year, and then that's going to impact your cash flow there. So that's something to really keep in mind on there.
And I will say that everything that, again, Omar is saying is absolutely correct. I usually request when I'm representing a seller 6 months worth of utility bills and things of that nature, so that I could make sure that or 12 months, 6 to 12 months, I should say, so I can make sure that the numbers they're reporting are correct. Or in some of the cases with the mom and pop owners, I'm actually helping them to develop the profit and loss statement. So how much income is coming in and how much expenses. So I'm having to basically create that based on their documentation. So it really, again, depends on the seller or the owner of the property and how organized they are, if they're independent kind of do-it-yourself management, or if they have professional management. And to be honest with you, even if they have professional management, were they good record keepers? I've seen management companies that are really strong at property preservation, but not as strong at books, and vice versa. So you definitely have to kind of determine that as well.
Yeah. And speaking about that too, Kevin, that you're buying from a seller who they are an owner-operator, and you don't factor in that management fee, you're then, if like me being an out-of-state investor, I always have to factor that in.
Right.
And if you're looking at a property out of state, unless you're going to be out there managing it yourself, then you better factor in that expense in there as well.
Well, one of the things on your point number 3 in your article as building condition and inspections. And I remember when you purchased the apartment complex from me here in Houston, you had a unique way of doing it. Some of my clients will order actual property inspectors to do inspections, but I noticed that you, and I've had a couple other clients do this, but you actually did a little bit of a different method. You walked each unit your individual self and kind of tested, things that as you saw fit, and wrote notes on each unit, and then had someone come and look at the kind of major things. So that seems like to be your philosophy. But could you talk about, building condition and inspections?
Yeah, what I like to do, I do like to go through all the units, and what I do, as soon as I come in, I make a beeline for the kitchen.
Mm-hmm. Yes, you
And
did.
what I'll do is I'll turn on the faucet and open up the base cabinet underneath the faucet sink there, and just check for any leaks down there. I'm always very sensitive about water leaks and plumbing and those kind of things. And then I'll go into the bathroom and I'll do the same thing. I'll check the water heaters and check the years of the water heaters. And then I'll look around, look at the ceilings, make sure that there's not any water damage on the ceilings, because that can be an indication that there's roof leaks. And then just a general, then after that I'll just generally inspect just the condition of the walls and the flooring, the cabinetry and all that. And then, yeah, just like you said, on the bigger things, like the roofs, might bring in a roof inspector. On the plumbing, we'll bring in like a plumber who can video scope the lines there and make sure there's no collapsing pipes in there.
Very important, folks. We went kind of fast on that last point, but that last point can be an expensive repair. Getting that line scoped. A lot of the inventory I know here in Houston that is 36 to say 100 units is older, and so cast iron piping or clay cement type of piping that breaks, especially if it breaks under the foundation, can be upwards of $100,000 repair. So it's worth paying anywhere I've seen from $500 to even $1,000 to get that line scoped.
Yeah, absolutely. Like you said, that can be a very costly thing there. And other things as far, I already mentioned the roofs. We have the roofer come on in and check those out. Third-party reports, things from like the termite inspectors. Mm-hmm. On the bigger properties, you have what are these environmental reports. The lenders like to see those, and and you want to keep in mind is that if the property's been there a long time, you'll be okay on the environmental reports, but there could be instances where they might find something in the environmental report that triggers a level 2 environmental report, and then those could be a little bit more costly there.
Absolutely.
And also, some properties will have a certificate of occupancy, and that's stuff that you have to go to the local government there and get those kind of things to. Maybe the sellers might have those kind of things, but permits, and those kind of things, you definitely have to go to the planning department at the city, and. You may even find that there may even be some outstanding permits out there, and that's something that you can bring up in that process there.
Yeah. And what I'll say, Omar, here in Houston, we actually have not only COs, and COs you only have to get once. Once you renovate a property and if it was empty, you get the certificate of occupancy, and upon transfer of ownership, you don't have to get it again. However, what we do have here in Houston, and it may be the same or similar process around the country, is we have a certificate of habitability, which is an effort by the local government here to make sure that they are looking at the conditions of property as they exist now, life safety stuff, the railings, foundations, electrical, things of that nature. And that happens every 2 years. And so for those of you that are in the Houston market, if you try to transfer a property, well, let me say this, you can transfer a property without a certificate of habitability. But if you happen to be that buyer and just didn't know about that process, and then the city shows up, they can red tag you and shut you down if that certificate is not up to date. So it kind of acts as a de facto CO during the ownership process. So I know I have a lot of Houston listeners, so I just want to throw that out there, that is a part of your inspections and due diligence. And that's for any property that is 3 units or above in the city of Houston.
Yeah, you know what? It's really interesting that you brought that up. there's been some recent court cases here in California, and actually one of my very first Twitter or Instagram, I think it was Instagram, I put a photo there where I was on site at this particular property here in the city of Highland, and I'm there with a code enforcement officer who was doing exactly what you were doing. They were inspecting units that they suspected were rentals, and then, marking down things that they were requiring people to fix up. And this was without anybody complaining. The tenant didn't call anybody. This is just something that the city was doing arbitrarily to, I guess, like you said, for certificate of habitability. Well, and it's been something I've actually read about in some of the northern cities as well. What happened was that a property owner there in Highland sued the city because it's a violation of their rights. Search and seizure, you need to have a warrant to be able to
Oh, really?
Yes. So they took the city to court, and they actually won.
Wow.
And yes. So it was a big thing here for property owners. They're hoping to, I know in the local association I'm a member of here, I think they might try to do that in Los Angeles here, because Los Angeles it could be a difficult city there to be a landlord there. But they're trying to they might be doing something in there, and they're hoping that this case will set a precedent for future property owners' rights.
Well, that is really interesting. I will say the certificate of habitability here is for the external stuff, but I could see where that would cause a issue if people just knocking on your door and coming in and doing inspections with no rights really to do that. So that makes complete and total sense. So kind of as we come to our final point here, the fourth point in your article is personal property inventory list. So what did you mean by why do I need to know that information, Omar?
Okay, well, you need to know that information so that you know exactly what you're getting with the property. Obviously, you're going to get the building and the unit and the landscape and all that, but there may be other things with the value. Like I mentioned, the washing machines. If you have laundry on site and the owner or the seller owns those, you want to make sure that that's going to get included with the sale as well. If there's laundry hookups inside the units and there's obviously appliances inside, you want to make sure that it's stated somewhere in there that every unit's going to come with a set of appliances, so that they don't come in the middle of the night and take off with your stoves and refrigerators or something.
Which I've had happen before, folks. I'm just letting you know that he's not just making it up. It may not have happened to Omar, but it's happened to my deal. So yes.
Well, I'll tell you what did happen to me is that we had this particular complex had a supply room with all sorts of tools, and I love having a bunch of tools around. I'm kind of one of these tool guys, and there was these big long ladders in there, that were going to help us get on the second stories and check the roofs on there. So I just assumed, all that stuff is coming with it. Well, sometime in the middle of the night, and they came around and they took the ladders, and I go there and I say, hey, what happened to my ladders? They had taken the ladders. So, so you just want to make sure that any tooling, supplies, I'll tell you the apartment up there in Indiana, the seller had a portfolio of many properties, and he was using that complex as his base of operations. So there was just tons of paint buckets, tile, flooring supplies, electrical supplies, plumbing supplies. I mean, just massive amount of supplies in there. And I wanted to make sure all that stuff was going to stay with the sale. So, and if you have an office on site, you're going to have furniture in the office, a desk, any computers, websites as well. You want to make sure if they have an existing website that advertises the property, that's going to be transferred with the property as well. And things of that nature. Any equipment. This particular property had a big one of those big rider grass mowers. So we made sure that was staying with it, and those sorts of things that can help you with the operation, supplies, tooling, furniture, appliances. All those kinds of things.
It's what we call in our business non-realty items, and there's actually usually an addendum that you go through during due diligence or before, where you agree with the seller. These are all the non-realty items that will transfer the property, and you get it in writing, so that you do have some level of recourse if that happens. So, Omar, like I told you before, we kind of keep these things to 30 minutes. So I will definitely have you on because you have such good information on your blog and just a good person to know. And I know you guys do some what we call syndication as well. So if people want to get in touch with you and read your blogs and things of that nature, what's the best way to do so?
You call to my website there. It's www.LeRu, it's spelled LERU, and followed by investments with an S at the end.com. So altogether it's LeRuInvestments.com. There's you can sign up for our newsletter there, and every month I send out information like this and some of the other experiences that we have that people find very helpful on an educational level there.
And folks, he's a good follow on Instagram as well, because he's like taping when apartments getting painted and when refrigerators are getting installed. So he is not just I'll talk about it, but you can see him doing it on Instagram. I follow him on Instagram, by the way.
Oh, thank you for that.
Yeah, absolutely. Well, Omar, I appreciate it. I know we could talk for hours because you and I have done that before. So I will have you back on to talk about some of these other things that I see on here. You're doing an awesome job with your website and your information. And by the way, folks, if you ever are in the OC, Orange County, I'm trying to be cool by saying the OC. Omar does a meetup, and you can sign up for that meetup on his website as well. And they do a very good job. I've actually been honored to be a speaker to that meetup group, and fun crowd, good questions. And, so if you're in the California area listening, because the real estate of life is worldwide, then feel free to get on LeRuInvestments.com and sign up so you can meet these guys and see what they're doing.
Yep. And I appreciate you coming down that time, Kevin, and speaking to our group. They really enjoyed that. Yes.
And I made some good contacts and got to see California, which is like a different country from Texas. So I'm happy. Well, Omar, I appreciate it. Again, thank you so much for all you do. Thank you for being a client. Thank you for being a friend. And again, we will definitely have you on again. And again, this is Omar Ruiz with LeRu Investments, www.LeRuInvestments.com. And I will see you next week on The Real Estate of Life with Kevin Riles. If you have a question about anything that we've talked about on The Real Estate of Life with Kevin Riles, a real estate question or a life question, no matter what, email me at kevin@kevinriles.com. Again, that's kevin@kevinriles.com. I'll get it. I'll make sure that I respond to you via email, but also I want to kind of collect these answers so that I could help everyone else. So again, kevin@kevinriles.com.